Good afternoon. This is Ron Giffler, your FMA president. This is our sixth in a series of Friday noontime web town hall meetings geared to inform you on the financial survival through this COVID-19 epidemic. We're slowly getting back to work, reopening Florida, but what I hear and what I see in my own practice, it's very slow so far, coming back in many areas and in many places. And so we still have a very substantial financial troubles ahead. Revenues are already declining from previous weeks of inactivity, and as the draw up is slowly taking place, we have a lot to get through yet. We have a panel of speakers today. Our main speakers this week will be talking about federal aid and your taxes. We have a variety of aid programs from the federal government of various types, and we will have those discussed. We'll also have updates on our state and federal regulations, and also we will have a guest speaker for our FMA in addition. Right now, I'd like to introduce Carr, Riggs, and Ingram. They are more commonly known as CRI, a top 20 CPA firm, and they're in at least 10 Southeast states, and they have 22 offices throughout Florida. And today's topic is going to be federal aid in your taxes. There have been a number of aid programs, and some of them have loan forgiveness, different criteria, and some of them you have to have loan payback. And so the issues of taxation come very importantly. When we were children, we were all taught the importance of forgiveness. And now we're going to hear how this is happening from our federal government. We have two speakers. Michael Carter is a partner in Tallahassee and handles the audit and tax work for the Florida Medical Association. So he comes well recommended by myself and the rest of our staff who work with Michael on a continuing basis. David White is a tax partner in Tallahassee and actively works with numerous professional associations regarding the tax impact of the CARES Act. So I will now turn the program over to Michael Carter and David White from CRI. Thank you.
Thank you for those introductions. My name is Michael Carter, and I'm with Carr, Riggs, and Ingram. And today what we're going to do is break this down into a couple sections. I'm going to talk about the Paycheck Protection Program and give you some information about what we do know and what we don't know at this point. What we don't know is just as valuable as what we do know, because I know that everyone is trying to plan to maximize forgiveness and to be able to allocate the proper expenses into that 8-week period. So we'll talk a little bit about the forgiveness. We'll also talk about the current status of the program. And then I'll also kick it over to David, and he can talk about some other tax incentives that are available to you as part of the CARES Act. First thing we'll talk about is the current status. This information on the slide is updated as of May 12th. I checked late yesterday afternoon, and this is the most current information that's out there. Out of the second round of the Paycheck Protection Program funding, which was $310 billion, $189 billion of it was paid out as of May 8th. Of course, today's May 15th. We assume that amount has gone up considerably as it nears that $310 billion that was appropriated. Some of the most important news that came out this week was about the safe harbor. There's been a lot of information in the news and a lot of scare tactics, quite honestly, about need and the certification that the applicants had to sign saying they needed these funds to be able to continue operations. Guidance as of May 13th that came out by the U.S. Treasury and SBA said that any borrower that received less than $2 million will have a safe harbor on that certification. So that means that generally they won't contest whether you needed the funds for operations. Now, it still applies for those who received funds in greater of $2 million. And at this point, what our firm recommends is that you document the state of your business as of the date that you applied for the loan. That way you can support the rules that were there at that time and how you fit into needing those funds. Remember, the rules that applied as of the date of application are generally going to be what is looked upon, even though there has been guidance issued since then. Moving into the forgiveness, I'll run through what we do know. Some of these we mentioned on the last presentation, and they still hold true. As I've said, U.S. Treasury and SBA are issuing guidance daily, and there is supposed to be a lot of new guidance coming out. It was supposed to be this week, and some has, but there's supposed to be some additional guidance on some of the particulars about the eligible expenses in the forgiveness policy. Once those come out, we'll forward them to your representatives at FMA, and they can disperse them as they see fit. What we do know of the eligible expenses, their payroll costs, rent, utilities, and interests. Some of the clarification that has come out, or some of the interpretation, I should say, is with rent. And within the CARES Act, it mentions real property and personal property. There's been a lot of questions about, is rent only for facilities? Is it only for our day-to-day rent for our office? Well, with personal property being included in that rent amount, there is the possibility that you can use, for instance, if you're a trucking company and you rent your trucks and your vehicles, you need those trucks to operate. So equipment can be included in the rent as of now. That's our interpretation. As far as interest goes, was mortgage interest. It says real property and personal property. Again, if you have notes on equipment that are vital in your organization to be able to operate, some of that interest can be included in those costs. Moving down the bullet points, borrower has 8 weeks beginning with the loan origination date to use those funds for the eligible expenses. That loan origination date should coincide whenever you receive the funding. You have 8 weeks from that period to incur the costs. The interim guidance states that those funds can be used 75% on payroll, with no more than 25% being used for rent, utilities, and interest costs. Those percentages have come into question lately, and so that may be the stringency may be lifted a little bit on those percentage, but as of now, those percentages are what we're working with. Each employee included in your payroll costs is limited to $100,000 of compensation on a pro rata basis. That $100,000 of compensation is what you would consider your W-2 wages. It's wages. That $100,000 shouldn't include any of the benefits that would not be included in your wages. The costs of employees related to group health insurance and retirement plans, those aren't included in that $100,000. As I said, those are just the wages. They're included in payroll costs whenever you get down to the breakdown of your 75 versus 25, but they aren't included in your wages. And then finally, what we do know, self-employed compensation. It's based on 8/52 of the net profit of the borrower's 2019 Schedule C. If you're a 1099 employee and you get 1099s issued for contract labor, you're basing that loan forgiveness and loan proceeds on the 8 weeks out of the 52 of your net profit from that tax return. A few more items. The federal government has announced that they will audit all loans greater than $2 million, but that doesn't alleviate those with less than $2 million. They'll still randomly select, or who knows if it's subjectively select, others to audit. If the borrower has laid off employees, it doesn't have to necessarily hire those same employees back. It's position by position. It's more of a head count. If you had 30 employees as of a date certain and you have to retain 30 employees, it doesn't have to be the same ones. It can be new ones. And then finally, what we do know, if a offer was extended to a potential or an applicant and that person rejects it, that actual offer counts in your, I guess, in your determination, or in this case, as it's written here, it's excluded from the reduction. So as long as you have the written documentation of that offer and written rejection of that offer, that counts as a full-time employee position where you attempted to retain them. Some of the important items that we just don't know and we're awaiting more guidance on. Will the 8-week period be modified for those businesses that the government mandated to be closed? Some businesses just aren't up and running, and they've already received the funding. So how can they maximize their forgiveness during an 8-week period if they're shortened down to 6 weeks or 4 weeks? Some of the experts say that there will be some modifications to that 8-week period, whether it'll be extended for certain industries, we don't know. Cash versus accrual. There's varying language on the payment of expenses. What we do know is that prepaid expenses, where you may pay for 4 months worth of rent at the time during the 8-week period, the general thought is that you can't prepay amounts just to use up the money. However, whenever you report your wages and you report those to the IRS, those are on a cash basis. So there's some confusion on whether, okay, is it 8 weeks of wages or is it what I paid during the 8 weeks? Surely there'll be some clarification on that. And then as far as the application of the $100,000 limitation per employee, when it comes down to annualizing those wages paid during that 8-week period, is it annualizing each payment that is made to see if they exceed the $100,000? Do you add up all the payments during that 8-week period and annualize it in that manner? They haven't really issued any guidance on how you arrive at the $100,000 limitation. As far as the reduction of your forgiveness amount, as most of you know, if you don't, the whole purpose of this is to retain your employees. If you have a reduction in the amount of the employees when comparing periods, then a reduction of that forgiveness amount, which you calculate as the eligible payments during that 8-week period, the reduction will get reduced, or the amount will get reduced by the reduction in the number of employees. Basically, it's the average number of full-time employees employed during the covered period as a percentage of the average number of full-time employees per month employed during February 15th, 19 to June 30, 19, or January 1st, 2020 to February 29th, 2020. The employer gets to choose which time period is the most advantageous to them. So obviously, but when you're looking at those two periods, you want to pick the one that is lower so you have a better chance of exceeding those marks. There's also some reductions in the amount of compensation. If a person's compensation is reduced by more than 25% from the most recent full quarter they worked, then that is taken into account to reduce the amount of the forgiveness. Now, one thing that you need to keep in mind, both of these reduction policies don't apply if you retain 100% of those employees by June 30, 2020. Those periods don't matter about, comparing them and whatnot during the two different periods stated above or the 25%. If full-time employees and total pay are restored by June 30, 2020. Some things that we don't know about the reduction. We don't really have a lot of clear guidance on the definition of full-time employees. The IRS or the SBA has some guidance in general, which refers to the IRS. And typically what we do is say if you work 30 hours during a given week, that is a full-time employment equivalent of a full-time equivalent there. So that's the rule we have been generally advising our clients of. As far as the restoration calculations, no guidance has been provided on the exact rules of that restoration calculation. So how long before the June 30 must that restoration take place? Is it a weighted average? What happens if you reach that mark as of June 15th and you fire at some employees on June 20th? What happens if you end up firing some employees after June 30? Not a whole lot of clarification there. And then the definition of a seasonal employer. There are some different rules that apply for the seasonal employers about time periods. And it says in the act that the SBA will make that determination, but they haven't given any guidance on that. This is some information that we might know as far as what you need to collect to document your forgiveness whenever the lender asks for it, whenever you request forgiveness. You'll obviously need some information from your payroll provider or your payroll system. You'll need information from your payroll tax filings, both of those to support the payroll costs. As far as your state income, payroll and unemployment filings, you'll need the filings that you filed with those. Documentation about payments on mortgages, rent, and utilities. Keep those canceled checks if you still get them to document the payment. As well, keep the canceled invoices nearby so you can submit those along with your application for or request for forgiveness. And then as far as the borrower certifications, as I said earlier, if you're greater than $2 million, the certification about your need will come into play, and you'll need some documentation there about that. So these are the items that we suggest that you retain. Obviously, they're a little bit general, but each person will have a varying situation from which to collect their reports from. Next, I'll turn it over to David so he can fill you in on some of the other tax incentives and specifically the employee retention credit.
Sure, thank you, Michael. And on our last call, we talked about a few other incentives beyond the employee retention credit, which I'll hone in on in a second. But the CARES Act is, the PPP got a lot of the fanfare as it rightfully should, but there are additional tax incentives beyond that, including, and we can answer these if any questions come up during the Q&A period about the payroll tax deferral, which some of these programs cannot be used in combination with the Paycheck Protection Program. The deferral of Social Security payroll taxes is one of them. And then there are also the emergency paid sick leave, the emergency paid family credits that you can get. And then beyond that, getting into some of the weeds of some tax issues, the enhanced expensing of leasehold improvements. That was a correction, frankly, that was made that referred back to when the 2016 tax law was first made. It corrected a little issue there that allows, basically, if you rent a facility and you rent an office space and you put in some leasehold improvements, a few years ago you were limited to being capped at having to depreciate it over a pretty substantial period of time. The CARES Act actually has corrected that, and it allows you to effectively immediately expense it via bonus depreciation. But beyond that, and also some other issues relating to NOL carrybacks, I really wanted to today talk about the employee retention credit, mostly because it is probably one of the more beneficial aspects of the CARES Act that you can only use if you do not use the Paycheck Protection Program. So if for whatever reason, if you didn't qualify, if you have too many employees, if you just decided you didn't want to use the Paycheck Protection Program, you can get the employee retention credit, and it is available to any employers, regardless of size, whereas the Paycheck Protection Program is capped, including tax-exempt entities. And it's for a maximum of $5,000 per employee, 50% of wages up to $10,000 for 2020. But there is, of course, a catch. You have to have your business partially suspended due to government order, or be able to showcase a decline in gross receipts of 50%. Ultimately, if you hit one of those thresholds in qualifying events, you can get a payroll tax credit, either via a payroll tax form, one of your quarterly forms, 941, an amended quarterly form, a 941X, or even in advance of that, you can actually file a form 7200 that is to get an immediate tax benefit even before you file a form 941. And again, just to reiterate, the employee retention credit you cannot receive if you've received the Paycheck Protection Program funding unless you've repaid it. When I made this slide, it was before yesterday, and I think as of last night, they've punted that until May 18th now, and I wouldn't be surprised if they even extended that further. But if you have not received the Paycheck Protection Program funding, I would highly encourage you to look into the Employee Retention Credit if you qualify. And that's all I have.
All right, David, thank you very much. And that's all we have from Carr, Riggs, and Ingram on the Paycheck Protection Program and other CARES Act incentives.
Now we'll have several questions if you want to comment about the income tax consequences of forgiveness.
Yeah, as of now, what we're recommending is, I'll answer that in two parts. One, as far as the accounting goes, remember, this is a loan initially, and you must request forgiveness. So if once that forgiveness gets approved, it does, for your own accounting records, become income at that point. It gets converted from a loan to income. However, as far as taxes go, that income is not taxable. There's been a lot of discussion, though, about the non-deductibility of those expenses that it covers. So when you think about it, whatever you pay for as part of the forgiveness, you don't have to recognize that as income for tax purposes, but those underlying expenses that it forgives, you can't deduct either. So there's some pluses and minuses to the taxability of it.
Yeah, and Michael, just to quickly add on to that, as you've probably been hearing on the news, while it's actually been interesting to follow, while the Treasury has doubled and tripled down on that, you have that on one hand, but on the other, you have elected officials that are hearing from their constituents and business owners, and you hear there has been, Michael, I'm not sure if you've heard anything any more recently, but there has been, at least from a PR standpoint, a lot of noise about having Congress actually change that and actually having potentially there be an allowable deduction for, so you don't have to pick up the forgiveness as income. And then on top of that, businesses could potentially get a tax break if legislation passes for the potential deduction.
Yes, I'd like to remind the group that the FMA has federal lobbyists and Moy Long Group. They've been speakers before on this noon presentation, and that is an active issue in Washington now, and hopefully will be resolved in our favor. But I know that's on a lot of people's minds right now. Our next speaker is a friend of mine, Dr. Doug Murphy. He's a gynecologist in Ocala, and Ocala is one of the areas where the reopening is happening. I know their famous Hilton Hotel sent me an invite to come by and stay just the other day. Doug is vice president of the FMA and is president of our FMA PAC and has a few words to say to you today. Doug?
Thank you, Dr. Gifler. Can everybody hear me okay? My pleasure to speak to you briefly. Just want to invite you all to join us for what I know will be a really great bipartisan presentation by two of our political experts, Rich Heffley and Screven Watson, on the upcoming 2020 elections. They'll be discussing both state and national races, and no matter where you stand on the political spectrum, these talks will help to clarify one of the most consequential elections for the practice of medicine in many years. For those of you that don't know about the FMA PAC, our primary purpose is to help elect pro-medicine candidates. We're not a Republican or Democrat organization, we're a pro-medicine organization. And these series of talks will be bipartisan, and the information you'll receive will not be found anywhere on TV or in printed media. Mr. Heffley and Mr. Watson have decades of political experience and are, in my personal opinion, two of the most astute political minds in Florida today. So the events will be as follows. The first will be on Wednesday, June 3rd at noon, and this will be an overview of the presidential election. The second will be Wednesday, June 10th, also at noon, a discussion of the United States House and Senate races. And finally, after qualification occurs, Wednesday, June 17th, also at noon, a discussion of the state House and Senate races. In order to participate in these presentations, you must be a member of the PAC or the 1000+ Club. If you're already a member, you're all set and you can join us on those dates. If you're not a member of the PAC, then go to www.flmedical.org and click on the PAC icon, and that will take you to the PAC website, which will allow you to join the PAC, and then you can get access to these lectures. I'm very excited about these insightful discussions, and I look forward to all of you joining us on the 3rd, 10th, and 17th of June at noontime. And please spread the word to your colleagues. This is going to be something very special that we've not done before. So thank you very much for the time, and thank you, Dr. Gifler. I appreciate it. Back to you.
Thank you. Those speakers are fascinating to listen to, and you get insights you don't get anywhere else. I know I've been hearing them for some time now, and it's always a treat. Our next speaker is Darren Fowler. He is director of the FMA's Healthcare Policy and Innovation Department. Jarrod is an expert in the financial and other regulatory matters related to this and other aspects of healthcare, finance, and regulation. We've had quite a few regulations the last couple months, and there have been new ones every week. So Jarrod, let us have an update from you and see what's happened since we were on the air last.
Hey, thank you so much, Dr. Gifler, and thank you so much to everybody who's listening. It's a privilege to be here back for another webinar this week. So my update this week, I'm just going to focus on a few things. One, I want to mention the general distribution of funds that have been going out to providers through HHS. Many of you have received at least one tranche of funding under this relief program, and probably two by now. And I want to let you know that this is something that we're still monitoring very closely. One question that's come up a lot recently is that we've had a lot of providers who submitted financial information related to the second tranche of funds under the general distribution who have not received their payment. And naturally, a lot of people want to know where their money is. And according to HHS's FAQ on their website, and I want to mention that HHS, without bothering to mention it, did update their FAQ as of May 6th, in case some of you have not re-reviewed it since that time. HHS stated at that time that they intend to distribute funds under the second tranche of money within 10 business days of the submission of the requested tax and financial information. So if it's been 10 or more business days and you still haven't received your funds, we would suggest that you consider calling the CARES Act Provider Relief Line at 866-569-3522. Again, 866-569-3522. That is the CARES Act Provider Relief Fund. It's administered by United Healthcare. If you call it, do know that you will have to have your tax ID number in order to speak with somebody. Again, for those of you who replied to that, for that second tranche of funding that HHS, has made available through the CARES Act, please know that, they have clarified on their FAQ that providers should receive the additional funds within 10 business days of the submission of the requested information. Another thing, there are a lot of other, with respect to the general distribution, there have been a lot of questions and potential concerns that have come up regarding the distribution of those monies and, and how HHS intends to administer this program. And this is something that I'm hoping that anybody who has questions or concerns about it will please contact me sometime, anytime after the webinar. We'd love to hear from you because, the rollout of this program has been swift. It's not usual that Congress appropriates hundreds of billions of dollars, in this case $175 billion to providers, and they began dispersing such a large amount of money so soon. This $50 billion general distribution, if you look at the time from the law was enacted to the time the monies were dispersed, it's moving at almost an unprecedented speed, and in some cases the guidance that has been released by HHS has been less than totally clear. But we're hearing a lot of questions and concerns, and we please, if you have something, pass it along to us. Even if the guidance does not yet exist for us to address it, the more we hear from the pulse of our community, the more we can do to reach out to the appropriate folks to try to get answers, and also to help direct our advocacy efforts to resolve outstanding issues, as we may have the opportunity to do so through future legislation or rulemaking. And again, if you need to get in touch with somebody regarding the general distribution. If you have questions and you need to speak to a live person, that CARES Act provider relief line administered by United Health Group is available. The other thing I want to mention, because it's a huge concern of ours, and it's come up a lot rightfully, is that, so HHS appears to have distributed at this point the better part of about $100 billion in funds between the targeted and general distributions that they have released, but they still have, roughly 75 to 100 billion left, depending upon exactly how much they've dispersed so far. And the bottom line is they still have all this additional money, and it's important that it gets spent in the proper way. And we know, we've heard from you, and we know how important it is that Medicaid providers who did not necessarily take any Medicare patients in 2019 and who may not have qualified for some of the previous distributions, that those folks have, they've been left out, and that they are hurting like everyone else, and that we know there are many pediatricians and obstetricians and other types of providers that continue to need relief and maybe didn't receive it previously. And we don't want anybody to think that we've forgotten about this group. We know, and we've been doing everything that we can to advocate that HHS distribute additional targeted relief towards groups that perhaps previously didn't qualify for any. And we hope that we'll have new information to that end to share soon. We also, of course, encourage you to regularly check the HHS Provider Relief website for updates. They're constantly tossing out new information, sometimes pretty random hours of the day or days of the week. And of course, to check your FMA newsletters and the FMA news, and to contact us with any sort of questions you have, or if we can help provide any sort of clarification around this. But again, we know that the relief that's previously been granted hasn't done enough to help some of the folks in the Medicaid community, some of the folks in the pediatric community, and we want to make sure it's extremely important to us that those groups do get relief and that they get adequate relief, and so to the extent that we can do anything to that effect, we're just know that it's something that we're taking very seriously and that we're putting a lot of effort into. It's a focal point of our advocacy right now, is making sure that some of those additional monies that are left go to the folks who haven't yet to benefit from the previous distributions. Another thing I want to talk about just briefly is sort of future legislation. So as many of you know, the House Democrats introduced and will soon pass a piece of legislation known as the HEROES Act. $3 trillion, piece of legislation. It's a partisan piece of legislation, and nobody in the political world expects it to pass as written. And the Senate is not expected to take it up or any other legislation up right away. But nevertheless, the text of the legislation is still important because it may serve as a starting point for another future legislative package that is expected to be taken up sooner or later down the road. And it's worth noting that the HEROES Act does include an additional $100 billion in provider relief. And it makes, and unlike a lot of the, some of the monies that were previously appropriated, it provides very clear guidance where those funds are distributed to providers in the most sort of equitable and efficient way. That providers are reimbursed on a quarterly basis for COVID-19 related expenses and for a portion of their lost revenues. The legislation on the whole is something we have no comment on, and clearly nobody anticipates it's going to pass. But that particular provision looks like it may be promising, and whatever sort of legislative text is ultimately taken up later on the road, again, it's important to kind of know, what the House is considering, and to look at items that maybe we're trying to place into a package that ultimately does move. Another thing that's included in the HEROES Act are some improvements to the accelerated and advanced payment program that CMS suspended. Basically, some provisions that would help keep that program afloat, and make some modifications to it to make it a little more generous to providers, and to eliminate some of the risk for providers that may struggle to repay those advance payments within the applicable period. And that would be another provision of this proposed legislation that would potentially be beneficial, or possibly something that we might like to see preserved in any sort of legislation package that does move forward. Another thing that is included are some enhanced traditional Medicare payments that are targeted towards providers that see COVID-19 patients that have certain healthcare needs. And again, it's a partisan piece of legislation. It's not going to pass as written, but these provisions that are in it as it's drafted are still important to monitor. The final thing I would say about it is that currently it does not include a surprise medical billing provision. And this is something we'll be fighting, to keep the same. One big concern is that the surprise medical billing provisions that have been floated in Congress, some of which would do tremendous harm to the practice of medicine at a time when many physicians are already struggling. That may be an effort to place those a surprise medical billing fits that would harm patients and harm physicians into this NETS package, and that's something where obviously we'll continue to remain vigilant, something that we'll be monitoring very closely. And it's a concern that we're aware of, and something that is a top priority for the federal lobbying group that Dr. Gifler previously mentioned, and for the FMA generally. But it is worth noting, I think, again, that there is no surprise medical billing provision in the legislation in the HEROES Act as it is drafted. And so at least, there is no surprise medical billing provision as of this point in time, therefore. Again, it's just something that we'll continue to monitor as things move forward. There's obviously been a lot going on. Sorry, my cat here is he's just kind of blocking me. But we know there's a lot going on with these HHS distributions. We know that there's a lot that's still likely to happen in the future with the additional monies that HHS has available, and with this new relief bill that will probably start to move forward and manifest itself in the form of a legislative package that can advance sooner or later. And with that, I'll kind of close, let you know that I'll be happy to answer any questions that I can, and again, encourage you to reach out and let us know concerns and questions are, so that we can, again, just better inform our advocacy and do anything that we can to help those.
Thank you very much, Jarrod. Our next speaker, and I believe last speaker, is our General Counsel, Jeff Scott. You all have heard Jeff before. Jeff will give us an update on regulations and law in our state, which have been changing the last few weeks. There have been a lot of new executive orders, extensions, and changes. And so, Jeff, take it away.
Thank you, Dr. Gifler. And it'll be brief because the activity that's occurred during this last week hasn't really primarily been focused on healthcare. Longtime listeners of this program will remember the discussion that we had on Executive Order or Emergency Order 20-002. And this order was the Surgeon General's order that would allowed physicians who certify patients for medical marijuana to continue to provide certifications for existing patients who qualify for medical marijuana without having them to have to come into the office for an in-person examination. They would be able to do that via telemedicine. And in addition, physicians would be able to continue prescriptions for controlled substances for patients with chronic non-malignant pain without having to do an in-person visit. And as we discussed at the webinar last Friday, that order was set to expire first on April 15th. The governor then renewed it until May 8th, and then on Friday we had a discussion that about that. We got word from the governor's office that it was going to be extended. Unfortunately, we didn't get that order until well after the webinar had ended. In fact, didn't see it until Monday morning, but it was officially extended. The order is now effective until May 31st, so you can continue providing controlled substance prescriptions for your chronic non-malignant patients and certifying patients for a continuation of medical marijuana without having to do in-person examinations. The other orders that have occurred this week were primarily focused on Dade and Broward County. Palm Beach has been opened up into phase 1. The governor has announced an initial order that will open up Broward and Miami-Dade on effective as of Monday. And right now, the governor is giving a press conference, which I was listening to, trying to out of one ear and listen to their speakers out of the other, trying to pick up any information as to what he's going to do regarding phase 2, the opening of phase of the state for phase 2. He's still speaking right now, and he hasn't gotten to his particular order. So that will be coming within the next 5 minutes. Probably 5 to 10 minutes, though he does like to speak a lot, so it may be longer than that. But as soon as he makes that announcement and we have an opportunity to take a look at the order, we'll get those online, and we'll let you know what those mean for physicians. I suspect that the announcement will be that he's opening up the entire state for phase 2. But exactly what phase 2 is going to look like, it may differ from the task force recommendations. We'll see. Certainly, we'll have that information for you on our website. And if you have any questions about anything else that's going on, the legal nature in regards to your practice, feel free to call me or send me an email at jscott@flmedical.org, and I'll be glad to help you. Thank you, Dr. Gifler.
Thank you very much, Jeff. And now it's time for your questions to be answered. We've had several questions here, and Matt, you want to start reading some of them? A few of them have already been addressed, but go ahead and see what additional information we can provide.
Okay, the first one is for our friends at Carr Ingram. What if you paid an expense like utilities, but the check did not clear until the end of the 8 weeks? And this has to do with the PPP questions.
Needed to unmute myself there. There hasn't been a whole lot of guidance on it. Like I said in the presentation, cash basis versus accrual basis, we're pretty certain that those utilities, you can't prepay them. So you're limited into the number of weeks that those utilities apply. How they're going to be substantiated is probably the question. Each lender is going to have their own set of rules and criteria. So what they ask for as far as support is going to be different. It's going to be for the utilities used during that 8-week period, but are they going to get the support for that based on the amount that you paid? Is it going to be the utility bill? Is it going to be the canceled check? We just don't know that. So hopefully there'll be some more guidance on that in the coming weeks, from the SBA or Treasury on cash versus accrual basis accounting.
Okay, and then we had another one. Is an advance payment loan counted as taxable income? Oh, sorry, this is for the Medicare advance payment and HHS questions. We are going to get back to the askers on those. Carr Riggs has a healthcare expert they're going to forward these questions to. Or if you have any questions you haven't put in yet on those two topics, please email us at membership@flmedical.org. That's membership@flmedical.org. We have another PPP question. Recently, we've seen an increase in our employee pay because of annual reviews. Will that count towards the Ppp Forgiveness Rule?
Yeah, it'll get included in the payroll costs if it's paid over that 8-week period. Whether the compensation went up dramatically, stayed the same, went down, it'll all get included in that payroll cost. The thing you've got to keep in mind is that the limitations apply. If the compensation is on an annualized basis in excess of $100,000, it'll get limited. So that's the big thing to take into account there.
Okay, Jarrod, we have one for you here. I applied for the second part of the HHS grant on the end of April. I've not received any funds as of today. The UHC call center is not very helpful. They did confirm receipt of our application, but that's all the information we have. Have you had any feedback from other practices about this grant?
Yeah, that's exactly the sort of feedback we need to hear. I saw where you emailed me that question as well, and that's exactly the sort of thing that I need to be taking back to the other state medical societies to see whether they're hearing this is widespread, whether they're not making the disbursements within 10 business days and running this up the flagpole to the AMA accordingly. Because this is a situation where it's nice that they put out guidance saying, hey, we intend to pay within 10 days. But if they're not living up, that's a widespread thing, then I need to take that up with the other folks and through our federation. And so I appreciate that feedback. I'm sorry that, you've had to wait on the additional funds, and I'm sorry that UHC hasn't been particularly helpful, but that is feedback that we need to hear. And so I would still encourage you to contact the provider line back, periodically, because I know that they are getting more and more guidance as it comes through. And I know that they tend to be some of the first folks to get that guidance. So I know it's frustrating, but that's still something that I would consider doing with a certain amount of regularity. And I will also run this up the food chain and through our federation to see to what extent people are not receiving the additional funds within 10 days of submitting the appropriate documentation, because that's a very important thing for us to know. And so I appreciate the question. I don't have any more guidance from HHS at this time. That's the guidance that they provided, was the 10 business days. But if they're not living up to that, that's hugely important, and that's hugely problematic. And we want to look into that as quickly as we can. So thank you.
Okay, this is another one for our friends at Carr Ingram. How should someone paid as an independent contractor be accounted for in payroll in the PPP forgiveness environment?
The guidelines came out, exclude independent contractors in the payroll costs. So those are not going to be allowable for the forgiveness amount. The general thought there is that those independent contractors can apply for their own PPP loan, so they would not be included in the organization's, the applicant's PPP amount.
Okay, another question on this same vein. If an employee was furloughed and now I want to rehire this employee, but they applied for and were approved for unemployment, how does this affect my loan PPP calculation for forgiveness?
I don't know on that one. I'll have to research that one.
Okay. And then a couple other PPP questions. How would EHR electronic health records be considered a utility? And B, would commission paid to our medical biller be considered a commission paid for independent contractor and thus qualifies payroll? I think the B would definitely go to your previous question, in that if they're an independent contractor, that doesn't count. But electronic health records, which are mandated for many, would that be considered a utility?
There's been no guidance on the utilities. However, it seems like it would be, because I mean, obviously that would be vital in the operations of a medical practice. So it seems like it should be. Like I said earlier, they should be issuing some guidance on, you know, what is included in utilities, what is included in interest, and those types of things. Those were promised. I thought I had heard this week, but I haven't seen the guidance on it yet. So hopefully in the coming week, if there is information out about that comes out that we've seen, I'll forward it to you so you can disperse that to your membership as well.
All right, and that looks like that's all the questions we have for now. If you had a question specifically about HHS in regards to taxes, please email that to us separately, and we'll get an answer for you. That's membership@flmedical.org, membership@flmedical.org. Also, if you've had any issues with your HHS grant, please also shoot us an email on that, as Jarrod would be very interested in that for our research purposes. Then that's it on the, oh, actually we have one more question, two more, sorry. This one goes to Carr Regs again. I'm an independent contractor. I receive pay based on my work delivered. How do I disperse my PPP loan to myself?
I don't know that you do. Some professionals have suggested opening up a separate bank account to put those PPP loan funds in for a number of reasons. I'm not necessarily condoning that or suggesting that you do that, but some suggest that you do. One purpose is to kind of keep those funds separate to where no one sees your other banking activity to question whether you need the funds and whatnot. Another is to just facilitate the ease of accounting for it. Only disperse the funds out of there when needed to be used or paid. When it comes to an independent contractor, you know, the rules are a little bit different. The way you get the money is based on the net profit. I'm not sure that disbursement needs to be substantiated there as far as the forgiveness. There hasn't been a lot of clarity on it. You know, so whenever it comes down to the forgiveness amount, how do you support those expenditures? That hasn't been decided. What I can suggest is maybe you open up a separate bank account if you're an independent contractor, and maybe you pull the money out as needed. Maybe you pull it out based on 8 52nds, I guess, 8 weeks of the 52 weeks of the year. Based on your net profit from the previous year. That seems to be what they're going by, is that 2019 Schedule C net profit. So I'm sorry I don't have much a better answer for you on that, but that would be my suggestion, is to do it in that way.
And we're going to have one last question here before I ask that. Jeff, have you heard anything else from the governor yet? Update people on, or are we still waiting?
We are still waiting. He is still talking. He's giving a little explanation of why the state's in good shape, and I'm waiting for him to make an actual announcement. So he's still going.
Okay. For Carr rings again, besides wages, rent, mortgage, is there any other expense that we can use the PPP on?
Well, in general, they're limited to 75%. Well, they're limited in 25% non-payroll costs. You can spend 100% on your payroll costs, but they want you to spend at least 75% on your payroll costs. Those broad categories are out there. As far as payroll costs, a few additional things can go in there. Remember, the wages are gross wages, so that would include all the employee payroll taxes, would include health benefits. It can include retirement for the safe harbor, corporate matching retirement. Those items would be included in there. Health benefits can be included in there. Some of the items for utilities, people have asked about fuel. Is that considered a utility? And the general consensus is yes, if fuel is necessary, if travel is necessary to operate. So, those are just some of the general questions, but as far as the specifics go, there is no information beyond those basic 4 categories that says these are excluded and these are included.
And hey, Michael, really quickly, just and this is also somewhat difficult because, and this is the world that we live in right now, but information comes at us almost daily, it seems. Someone had a prior question on if they have an employee that, and this is a common scenario, that they have been drawing on unemployment, and you reach out to them to see if they want to come back, and they deny your offer. The Treasury just came out with a little bit ago, a few days ago, that says, will a borrower's PPP loan forgiveness amount be reduced if the borrower laid off an employee, but then offered to rehire the same employee, but they declined the offer? And the answer is no, so long as you make a good faith effort, written effort to offer to rehire them. And if you can document that, then that should not, in that limited scenario, that will not penalize you from a loan forgiveness standpoint.
That's correct.
All right. Once again, if you did not get any questions answered today or had HHS related questions, please email those to membership@flmedical.org. I believe you also get a follow-up email after this webinar with that web address in it also. Dr. Giffler, I'll turn it back over to you.
I want to thank you all and remind you, Matt already mentioned it, but don't wait till next Friday to submit questions. If something is on your mind in the meantime, contact us. Also, next week, we're going to have at least one representative, possibly more, from the banking field who are making these loans and crafting these applications and may be very important in determining the final resolution of the loan program when we want to be forgiven. So that should prove very, very interesting also. In the meantime, everybody have a good weekend, and remember, our mission is to help physicians practice medicine, and we really mean that. And good luck to everybody. Thank you.
Thank you.